I hope you people can see my screen. Is my screen visible?
Yes, please.
Let us resume from where we stopped last time. Last time I had introduced to you about fair value gaps, and we had drawn on our chart all about fair value gaps. Those who missed are going to watch the video that will be uploaded. So today we are just continuing. We are continuing on the next thing. So today we are going to tackle the inversion fair value gaps. So this is what we are going to handle, inversion fair value gaps. So what are inversion fair value gaps? So an inversion fair value gap are fair value gaps that fail to show a change in market flow. You get? So this is what we call an inversion value gap. It's just a fair value gap that has failed to indicate on the chart or to hold. So they can be used as entries on lower or high time frame, high point of interest to signal market structure change. So fair value gaps are just the inversion. They are just previous fair value gaps, just like the previous topic we handled about fair value gaps. I told you that fair value gaps are created by three candles, and I gave you an illustration. First candle, second candle, and third candle. So is when this candle they fail to what? To fill this gap. So this gap is what we call fair value gaps. So an inversion fair value gap, just like you see here, this is a fair value gap. You get? An inversion fair value gap is when a candle is formed and it closes above that fair value gap, meaning this fair value gap that you see here, it has been inversed. You get? So remember we shall be anticipating for this fair value gap to act as resistance when price is going high, and to act as support when price is going low. So what happens is that when price is going, it fails to be hindered by this fair value gap, and a body close of a candle closes above. This one turns to become an inversion fair value gap. So so since this was a resistance and the candle has closed above it, so it becomes our current support. It becomes our current support. So you should put that into consideration. I will give you a number of illustrations. You see here, I told you that price is always hunting for swing points, liquidity after picking out the liquidity. The sell side liquidity is always hunting for the buy side liquidity, and one of the areas where liquidity is always on these swing points. You get those swing points. So this was our fair value gap that we expected to hold. We anticipated this fair value gap to hold, this one, but price closed above that fair value gap. So when price closes above, I told you that this will have been resistance. When price was going, it will have acted as resistance. But since it failed to act as resistance, and price closes here above, at this point you see there, this one now becomes support. So once price breaks through and it closes above, it will retest this fair value gap, and the price will. So that is the logic. That is the logic. They are just fair value gap that have failed to hold. Another illustration of an inversion. This is a fair value gap. Price closes here, and it tests by this week, and price continues. So it is not. This is now a bullish inversion because price is going up. So this is a bearish inversion. This is a bearish inversion. Yeah, that is a bearish inversion because price inversed the bullish fair value gap. This is a bullish fair value gap. Why? Because price was going high, so it left a fair value gap. So when price inverses and closes below here, so this one becomes an inversion. Price will always test it. After testing it, then price continues. So that's what we call a bearish fair value gap. And an illustration of a trade is this. I told you once again, I keep repeating this so that you shall keep it in mind. Price is always hunting for swing points. You get? Because there is too much liquidity here on swing point. There are very many traders who put their stop losses and also buy limits. You get? So price will always come, take that liquidity. Hope you see that sweep. I told you a sweep is when a candle wicks that, then it closes back into the range. You get? So that is a sweep. A run is when a candle closes below that point. You get? That is a liquidity run. Yeah. So this is the sweep is whenever the wick just sweeps. The wick does the damage and the body tells the story. So after remember price was it was hunting for this liquidity. So immediately it picked this liquidity, it reversed. You get? After reversing, this was supposed to act as a resistance. This. But the candle closed above, indicating a fair value gap inversion. A fair value gap has been inversed. So that's what we call inversion fair value gap. So you see after price closing here, it has to test this fair value gap with that wick before it continues. So that is the logic of fair value gap. Let's continue with this. Hope you can see this scenario too. Still, I keep telling you, price is always hunting for liquidity, which is on swing point. Price came down, then it fake traders as it as reverse, then came and swept that liquidity at that point. Yeah. So there was a fair value gap here that was supposed to act as a resistance, but it is inversed by a body close above. Price comes, tests it back again before it continues into that direction. So that is the logic. It keeps happening over and over. Hope you see that indication, inversion. So this is a bearish fair value gap being disrespected and supporting prices higher. So this was supposed to act as a bearish fair value gap where price was supposed to test, then continues. But since it failed and price closed above, we use it as now a support. We buy from here. We buy from here. So we put our stop loss here. Our target is always above. So as price has closed here, it will come test, triggers us in. If we have put a preset, Then after triggering us in, it goes into our direction and sells off. And I'm going to show you this onto as we go on the charts. Hope you see now a bullish fair value gap which has failed. We expect another scenario is here. You seen, I told you the logic of fair value gap. This is a fair value gap. Let me use this so that I can be neat with my work. That is a fair value gap. Yeah, that is a fair value gap. When price left that what, it came, tapped into it, price went up to high. So at this time when price, once this fair value gap has been tested, when price is coming back, it is not now coming back for the fair value gap, it's coming back for this swing point. Because I told you price is always hanging for this swing point. So price came back for that swing point. Then after picking that liquidity, this was a run. However, price, it failed to continue because there was an order block here also. So, and after it reverses, you get, we find here another inversion. Though it was not retested, I hope you see this fair value gap. That one is a fair value gap. However, price does not come back and retest it. Yeah, sometimes price won't come back and retest it, but this is a fair value gap which has not been inversion fair value gap because it was inverse price close above here. So since price was very much in a hurry, it continues. But it comes here, it touches a key point, a higher time frame point of interest. If you see the word POI is point of interest. HTF is higher time frame. So price taps into that higher time frame, which is a resistance level. Then it comes and inverses this fair value gap. It is supposed to be a bullish fair value gap that supports price upward, but since it fails and the price closes below, it comes back and retests. Hope you see that week. This week is that price after closing here, it tests again, then it comes back. And then I hope you see now how bearish fair value gaps are now being respected. This is a fair value gap. Price comes back, tests into it, and it continues down. This is also a fair value gap here. Price has tapped into it, and it is most likely to continue downward. So you should put that into consideration. You should put that into consideration. Yeah, I will be teaching you how. Yeah, there are those fair value gap that sometimes fails, but that is based on context. We shall know which fair value gaps and which inversion fair value gaps that we are supposed to trade. Hope you see this is an inversion fair value gap, but it still fails. And this one you have to be careful because price closes above. So when you don't have context, you will say, let me buy here because it will come and retest here, then continue. But the logic, we have to follow the higher time frame order flow, and I'm going to be teaching you that. Yeah. So let's see. Let me give you another scenario. This is another scenario. This is a higher time frame point of interest, which is a key level. So price was going upward, it was bullish. Then once it taps this resistance, it is a resistance level in resistance. Once it taps that resistance, it reverses and it closes below this fair value gap. So this fair value gap becomes an inversion fair value gap. So price will, after closing below, it will come and retest. Most times 80% price is always retesting those inversions. Sometimes it may not retest, sometimes it may not retest, but 80% of which we shall not, as a trader, you want to trade all moves. You will always trade on moves that have been provided to you. So price will always come back to retest before it continues down. You get? I told you that this fair value gap are just indications of that there is a heavy order that have been put into market, and therefore price is rushing into a specific direction. That's why fair value gaps are created, because whenever there are heavy orders in the market, there has to be inefficiencies in the market. Another scenario, I'm giving you many scenarios so that you can be able to memorize. Hope you see this scenario. Price was moving down, tapped into this key level, which can act as our support, our higher time frame support. Then immediately tap into that, it reverses, then it closes above this fair value gap. Put it into consideration, this is a fair value gap, so price closes above there, then retests with these wicks before it continues upward. So this is the logic of fair value gap. So I'm going to take you to the charts, and you're going to see it play out. Yeah, let me use Solana. Let me use BNB. I'm going to use the lower time frames because those ones are quite easy to. Let me go and use like, let me use 30 minutes so that you can be able to, yeah. Hope it is visible to you. So hope you can see this point. Just watch on my chart. Hope you see this fair value gap. I'm going to use this line so that you can also see visibly. I'm going to bolden it. Please be attentive. You don't need to draw the rectangle and the line at the same time. Me, I'm just drawing to make it visible to you so that you can be able to see it clearly. You see? So price was going down. As you see, it was retracing. So immediately it was retracing, and it had picked this liquidity here down. I don't know whether it is accurate. Did it pick liquidity? Let me use this line to check. Yeah, it picked that liquidity. Hope you see. I told you price is always hunting for swing points. Yes, immediately price picked that liquidity here down by a sweep. It inverses this fair value gap. So if we can set our preset here, then our stop loss below here, stop loss SL, then here we preset entry, which is a preset entry, then our target, we put it up. Let me just give you a scenario with this trading view. Entry what? This is how you use it. Imagine you put here your reset, stop loss here, and then target there. Don't you see you have a 2.3%? I'm going to just tap on what, and you see. Hope you see 2.8% already booked into your pockets. You get? So that entry brings for you 2.8% of the money you have invested into it. So these are very powerful PD arrays that you should keep into consideration. I'm still showing you more and more. More and more. There is here another inversion. I told you that these are just fair value gap that failed to hold. So don't be so You just go and check for fair value gaps that have been inversed, the candle close above them. Hope you see that one is a very perfect fair value gap. Why? Price picked this liquidity here in this fair value gap also. Hope you see this small fair value gap. These fair value gaps also have liquidity. That's why price goes into them. Hope you see that fair value gap. It is not an inversion. This is a fair value gap. That one, very small. If I can increase my what? Hope you see that part now. This part here, this one, that was a fair value gap. Price tapped into it and reversing. So after reversing it, it made an inversion fair value gap here. However, price did not tap into that thing. It did not retrace directly into that thing. This week stopped up. I told you sometimes it may not retrace into here. So you have to put that into consideration. Why is it that sometimes it does not retrace? That is when we have other PDRs that it reacts on. And remember, I'm still introducing to you these PDRs. So you should just be patient. I told you that this thing, all these concepts, they work together as one. You have to join pieces to make sense. Yeah. So let us continue with the inversion fair value gap. Where is another point of fair value gap? Here there is another inversion fair value gap. Please pay attention. That is a fair value gap. Yeah, it may look small, but it is. Hope you see. These are powerful key points. Hope you see that one when price tapped into this fair value gap. I told you that these are key levels. Remember, the last topic was about fair value gap. So today is about inverse fair value gap that failed to hold. You see that fair value gap when price tapped into that key level, which is a fair value gap. This key level, that one, it reversed. And when it reversed, it inversed here, closed above, tested, you get, and then just let me give you an illustration. If I would have entered using my what, I put here my what, I expect it to come back and retest. I put stop loss below here. Then again, I put my target above here. Even if I put this high, okay, there it will have, but I target a less percent. Hope, let me show you. Hope you see a 1.6% will have what? Yeah. However, there I will show you the perfect way of entering, because sometimes if you put your stop loss too tight, price will come and hit you out. Don't you see here? It came accepting. Yeah. So we should be aware of that. We are still building on this logic, so we are still learning. It will make sense after we have. Let me continue. So this were a bullish fair value gap that I've been showing you. Why? Because this was a trend which was bullish. So the fair value gap that we have been inversing, they are bearish ones. You see that now when this fair value gap, what? It is a bearish fair value gap. Why? It was supposed to act as resistance, where price, since it closed here, it is supposed to tap into it and continue. So these were bearish fair value gaps. So once they are inversed, they become bullish inversion, the inversion fair value gaps. Yeah. So we want to see bearish inversion fair value gaps. Those are bullish fair value gaps that have failed. Just watch and see. Let me start from this one. Check this. That is an inversion fair value gap. That is an inversion fair value gap. So price came and what? It closed below. So it tries retracing back, then immediately it goes down. You get? Then of course the if you don't have context, you will see very many, but not all inversion fair value gaps you are supposed to trade them. This was an inversion fair value gap, this one. Yes, it failed. Why? Because you see, price comes, closes below, so it is supposed to retest and what, but it goes and closes above. So that's why I'm telling you we still have a lot to learn for context, because we have to join together context to be able to get high probability inversion fair value gaps, IFVGs. You get? So we have to join together context. Going to other charts, I'm just going to take you to other charts so that someone cannot say that those are cherry picked. I can use let me use XRP. Let me use XRP. Yeah, I can. Let me go to a lower time frame, like 15 minutes. Let's use this one. Yeah, I'm just going to use this. I need bearish ones. I need those ones which yeah, I need those ones which are facing down. Yeah, from here we can see very well. So pay attention. Hope you see this. This is a fair value gap. It was inversed. It was inversed. That week, and also this week shows it was a fair value gap. So price closed below it, but price did not retrace into it immediately before it went down. However, price came here down and retraced. The reason why it did not reach up to this key point is because we have another fair value gap there. It did not need to reach into the inversion. Yeah, hope you see. So sometimes it won't work. So let's continue. Let me show you other inversions. Yeah, there are very many fair value gaps. Okay, these are not, this is just a fair value gap, not an inversion. I'm just showing you how price also still reacts on this what tapped into it. Yes, the weak, most times in these fair value gaps, the weak may always go as far as it can go, but what shows that the fair value gap is highly probable is that the body should always close below the fair value gap. It should not close outside, you get? So when you see these wicks going out like this, it still shows that the price just wanted to fill the fair value gap. That's why the wick went as far as they need. But the bodies, most time, they always respect the fair value gap. So you should put that into consideration. Yeah, another inversion fair value gap is here, a very perfect one, highly probable. That one is an inversion fair value gap. You see price for it yeah, that is an inversion. You see when price tried to when it came, it first tapped into it and went down before it went, you get? And when the reason why it came here because there was another fair value gap it wanted to fill. Let me just show you that fair value gap. That one. Perfectly. Price came, tapped into the upper fair value gap, also taking this swing point. As I told you that price is always seeking for those swing points. Also taking that swing point before it can go back down. And where did it go? It went into another fair value gap. Before it went, wow, this is amazing. Let me just draw perfect one so that you should be. Check this, check how this fair value gap supported price back up. This one, you get price. This was an inversion. This was an inversion here. This one here, an inversion. IFVG. Price continued. It tapped into this fair value gap, continued down, just like that. When it reversed and began heading upward, it left a fair value gap behind. So when price came and filled this fair value gap, it had to react, going back down, tapped into that fair value gap before it went. And as it also went, it left a fair value gap here. Let me just clear and I bring my screen. Yeah, as it also was, it went to the target high. It came back to the fair value gap here, reached here, came and reacted in the fair value gap. It went back. And why did it again go back there? Is that again there was another fair value gap here. And please just pay attention. You are trying to learn something. You see, it's a very tiny, small fair value gap, but price still what? Price tapped here, had to come fill this fair value gap before it went. So you see, after coming here, it inverts, it closes below that fair value gap. It becomes now an inversion. Price first gets back, then now comes closes down, and now begins to consolidate. So you should put this into consideration that this PDRA that I'm trying to teach you are very high probability. I can mark as many inversion fair value gaps as I see. Let me extend it. You see how price reacts into them. Hope you see how price reacted into that inversion. This was an inversion. Price inversed this point, closed above. When price came back in the future, reacted on it. It first reacted the first time here, went up, then came for this car swing point. Let me just draw it. Hope you see that swing point. Price reacts onto that swing point, goes what? Comes, sweeps again in the inversion still before it goes up. You get? So that's how price is always what? So these are powerful PDRAs. So the homework I'm leaving you with, just go on your charts again and begin drawing every inversion fair value gap you see. Train your eye. And the only way you can train your eye is by practicing. You get? You can also be writing in them like now how I have drawn like this. It is just a matter of double tapping on the rectangle twice, like this. Then you tap on text. You get? then you tap on text, then you can write in them like inversion IFVG. Yeah, IFVG. Then you see, no, you now put them to this side. You see this is the how you use this text alignment and center. So you just change inside, yes, then you put right. You see it comes at the right, you see this. So when you want to make it bold, you let me double tap, you just put this on and this. Yeah, so you just do this. Hope you see how my text has been boldened. And when they are too big, I can change this text size from here. Just put to 8 or 10 based on what you want it to look like. You see, I've put on 8 and small. I can put on now 11, and that is fair. You get? So that is how you what. So you just keep what. However, there is I told you there is what bullish inversion fair value gap and bearish inversion fair value gap. A bullish inversion fair value gap is the inversion fair value gap is a bullish is a bearish fair value gap that has failed. Let me give you this. Let me go back to my charts and you see. Just pay attention. Bullish. Let me go back. Yeah, here. Bullish inversion fair value gap. IFVG. This I is what indicates inversion. And of course, FVG, you know, it is fair value gap. So whenever it is inversion I, the I indicates inversion. So a bullish inversion is a bearish fair value gap that failed. I told you that when the market is going down, the fair value gap that are created like these are bearish fair value gap because they are supposed to support price to go down. So they are bearish. So once they are those bearish fair value gap are inversed by price closing above, they tend to be bullish inversion fair value gap, and the sign of bullish is plus. The sign of bearish is minus. So whenever you see me drawing on my chart, see plus IFVG, I'm just trying to say bullish inversion fair value gap. And if you see me writing minus IFVG, it's just indicating bearish because bearish is always down. So that's how what. So even the same thing with the fair value gap on FVG, a bullish I will put plus, and a bearish one I will put minus. You get? So you should always pay just because you cannot be writing in all of them. You write just all words. So you have to develop bearish FVG. So it is just better you write a sign, a bullish. You just put as a sign FVG. So that it is easier to what? Yeah. So this is a bullish inversion is a bearish fair value gap that has failed. Price has closed above, so it becomes bullish inversion fair value gap, and vice versa to the bearish is a bullish fair value gap that has failed. Price has closed below, so this one becomes a bearish inversion fair value gap. Yeah, so you just go on your charts and practice that. Do it over and over. Train your eye, and you will understand how to pick them on the charts as we are still. Yeah. Any question?